Exactly how much do you need invested to generate $1,000 per month in dividends? That's $12,000 a year in passive income. We'll do a 2026 reality check with current yields, real examples, and what it takes to get there without hype or get-rich-quick schemes. Stick around for the math, pitfalls to avoid, and a simple starter plan. Let's crunch the numbers. The core formula is straightforward. Amount invested equals desired annual dividends divided by the average dividend yield. For $1,000 per month, that's $12,000 a year, yield is the annual dividend payout by the stock or ETF price. But in 2026, what's realistic? The S&P 500 average yield is about 1.15% to 1.2%. Too low for big income. You'd need over $1 million invested for $12,000 per year in dividends. For dividend-focused strategies, Dividend Aristocrats averaging around 2.1%, the popular ETFs like SCHD, that's the Schwab U.S. Dividend Equity Yield Fund, would yield you around 3.4% to 3.5%. Higher yield options do exist with REITs or BDCs, and those can hit 4 to 5% and higher, but with a lot more risk. Here are two examples showing portfolio size needed to reach the $1,000 per month dividend threshold. Example 1. At a 2% yield, like with conservative Aristocrats, you need $600,000 invested. Try the math for yourself. The dividend, $12,000, the annual dividend amount, divided by 0.02 or 2%, which is the dividend yield of the portfolio of stocks. Now we've got the second example, which at 3.5%, like the Schwab Dividend Equity Fund ETF that we mentioned earlier, your portfolio would need around $343,000. All you have to do is divide $12,000 by 0.035. Pretty easy. Now, we have a third example, which you can try the math for yourself. The amount needed for a balanced high-yield portfolio with a dividend yield of 4.5%. Go ahead and pause the video, do the math on your own, and start it back up with your answer. The answer is roughly $267,000. We get that number by dividing 12,000 by 0.045. Now, all three examples assume no growth. Real life gets better with dividend increases and compounding, but we'll cover that. So here's the reality check. Not all $12,000 hits your pocket because of taxes. Qualified dividends are taxed at a rate between 0 and 20%, depending on your income. This example assumes the investor is not using a tax-deferred structure. Moving on, we will assume a 15% average tax rate, which equals annual gross dividends of approximately $14,000 a year for a dividend income net taxes of around $12,000. How do we deal with our tax bill? It is simple. We need to increase our investment by 15 to 20%. Using our last example, you divide the $14,000 gross dividend payment by the portfolio yield of 0.045 and then subtract the initial investment of $267,000, then divide by $267,000. And bingo. We have to bump our investment by approximately 17%. Now, another reality check is inflation. It's variable, You have to account for it in any type of investment. Current investments around 3% in 2026. This means your $1,000 per month dividend payment will buy less over time. There is a solution. Aim for dividend growers that have a dividend growth from 5 to 7% per annum. That way, your increases will hopefully be larger than what the inflation rate is. Also, with growth, a smaller starting amount snowballs with dividend reinvestment. A 5% stock appreciation plus a 6% dividend growth. Here's the good news. If you find an extra $20,000 in your couch, you could invest in a dividend portfolio that yields around 3.5%. You only have to wait 10 to 15 years to start producing your $1,000 a month dividend. If you go this route, remember, higher yields mean higher risk in the way of potential cuts or yield traps. Stick to quality for sustainability. Let's apply our new skills to real picks for 2026. The stocks and the ETF are selections from our previous video, Dividend Investing 101. First up, we have the Schwab Equity Dividend Fund. It yields around 3.4%. For a $12,000 per year dividend payment, you need to invest $353,000. Why this ETF? It tracks 100 quality dividend growers and has a low 0.06% expense ratio and quarterly payouts. Second, Procter & Gamble, a fine aristocrat, yielding between 2.6 and 2.8%, and has had 69 years of consecutive raises. You would need around $450,000 to invest to hit our target of $1,000 per month dividend payment. We like P&G because it has strong cash flow between $17 to $18 billion annually, revenue around $84 billion. Third, Johnson & Johnson, which yields around 3.2%. J&J has had 64 years of consecutive years of raises. The initial investment of $375,000 is needed to hit our monthly dividend target. J&J has strong revenues of $94 billion per year and a low payout ratio. Fourth, Coca-Cola, yielding around 2.6%. 64 years of consistent dividend payment increases. The initial investment needed for our monthly dividend target is $455,000. Coca-Cola has strong revenues at $47 billion a year and $10 to $12 billion in cash flow. Fifth and final, Realty Income. It is a higher yielding REIT at 5% with over 30 years of consecutive raises. You would need to invest around $240,000 to achieve our target. Realty Income has revenues around over $5.5 billion and makes monthly payouts. You can build a strong, diversified portfolio by mixing this 3 to 4% average yield with your others. Now, the steps to get there: calculate your target. Use free calculators. I'll give you a link in the description. You can save aggressively, $500 to $1,000 a month invested, and it grows fast. You have to choose quality. Aristocrats, ETFs over chasers. Reinvest via drip. And monitor. Adjust or cuts or make changes. You just got to monitor it. Pitfalls of dividend investing. People get burned by chasing 10% plus yields because they always prove to be unsustainable. Investors often ignore fees and taxes. Finally, they quit too soon. Remember, like a fine wine, compounding needs time. Now, the beauty of dividends, once built, income flows passively. In 2026, with low rates, this is more powerful than ever. You can start today. Your 1,000 dividend per month portfolio is achievable. If you like this video, hit that like button and subscribe to DividendSphere. Also, comment your target investment amount. And stay tuned. Next up, we're going to be talking about the top 10 undervalued dividend stocks that we see in the market now. Look forward to seeing you there, and keep building.